All right, everybody. This is Jason here, Level Head Trading, ready to give you some analysis on the market, on Bitcoin, and where we stand, what I see at the moment. So I'm going to go into Bitcoin first. So just going to have to forgive me because I'm still getting used to this setup here. All right. So on Bitcoin, we had news today that there were ETFs were going to be allowed. And so, right after the stock market closed, we had a really big push up. So, here was the finishing hourly candle on Bitcoin at the end of the stock market, where it closed. It closed at 46,144. And then in the next 2 hours, it climbed all the way up to 47,732. That was close to the all time high, which was back on Tuesday, 47,901. Well, I don't mean all time high. I mean all time high in the very recent times. So I'm going to go into the quick time frames, and then I'm going to go into the stock market and tell you some of the things that I'm trading and just some other things that I might not be trading, but just the levels and what's going on here. So here's the daily chart of Bitcoin. As I've been saying, the daily RSI is not oversold yet, and it's gotten cooled off by these pullbacks. We did break lower than that previous day when I was talking about that possible bull flag, but it still looks like a bull flag because you have these very big bottom wicks. So every time we had dipped down into this area of congestion, the bulls bought the dick, bought the dip. Excuse me there. So now we have 2 days, basically inside bars to this one. But if you want to count how far they extended out, they created a higher price, but they did not close higher than this candle here, which was 47,330. So the day before on Tuesday closed at 46,124, and then just very recently closed at 46,666. So now we're in the next day. But we do have that ETF news, which yesterday I wasn't aware of that news, but I had noticed that big candle that I talked about in my yesterday video. So this is where we stand in the daily chart. Again, holding really, really strong, holding the 12 period EMA line, which is what I like to use. That's a very good guide. It is choppy. It's been pulling down, touching that, and slightly going underneath the 26 period and going quite a bit underneath it on this particular day. But every time has been drawing itself back up and back up and back up and back up. And we got a lot of volume there on this day candle that just finished, which was the ETF news, which came after the stock market closed. So that's going to be really interesting to see what happens tomorrow. To me, tomorrow, Thursday, Friday, Saturday, and Sunday this week, which will then create the final, not the final, but what will this weekly candle look like by the end of this week? Are we going to break over this last this next resistance area, which is 48,240? We've gotten very close. We got to 47,901. So less than 1% away from breaking over the top of that candle. Then, like I said, on the weekly charts, the next area that we get into is from 47 up into the low 51, 52,000. So it is entirely possible with this ETF news that we could get back up into that range. But we are pushing the outer limits of RSI levels. We did peak at 83, as I mentioned before, and then now currently at 77.88, and the average RSI on the weekly chart is 72. So there's going to be a reset sometime fairly soon. I'm going to suspect, but so far everything is looking really, really strong. But we are pretty extended on this weekly chart, but we keep pulling back and retesting this inside bar weekly time frame, which played out for a month. And then this was a very strong candle that pushed us out. It didn't close out of it, but it peaked over it. And now this week, we've gotten over the top of that. So this week is going to be very interesting to see where we end up. So enough about Bitcoin. Now I'm going to go into the stock market. I'm going to go into particular things that I'm really excited about that I've been trading. I would say my number one um, pick as far as really having strong conviction is going to be Walmart. Walmart, this is and it's going to look the same pretty much on a 1 day chart. You have this gap area right here. This was earnings, I believe, back on November 15th, and earnings missed or whatever. Let me get my webcam back on. Earnings missed and dropped back down into that area there. So I always look at that as a buying opportunity, but not immediately. I like to let it settle down. Generally, when you have a big gap down, and in the course of that day, if you don't recover and push back up and show that you want to get back into that range that it previously was in, it's usually going to pull back some more. So here is where it pulled back, had a double top back there, and then pulled back, pulled back, pulled back. On the daily time frame, notice we almost got oversold on the daily time frame, got to 32. But this is a really good candle right here. And here's another really good candle right there. So a little bit above that is where I entered Walmart. I really like these types of candles. These are reversal sign candles, and it coincided with being almost oversold. When you go from here to being a 70 RSI, and then quickly within a couple of weeks, you get oversold. That's a quick, hard drop, and then you finally bottom out there. But what I really like about this is basically a cup and handle, and it's also broke out of the cup and handle. You can measure the distance from the top of the cup to the bottom, and that's going to be approximately where you will go. So just visually looking at this area to this area, you could potentially get up right up into this area about 165. And so we broke out of this. So we're making higher highs, right? So the daily time frames making higher highs and higher lows, higher high, higher low, higher high, higher low, and now a higher high. And now we're in the gap fill area. So really like that on Walmart. Going to hold on to that position, let it play out some more. I'll move my stop loss up on the higher daily lows. And on the 2 day chart, pretty much looks the same, but it's even a little more clear. So here's how the 2 day chart looks on Walmart. There you go, where you bottomed out. Love that candle. And then here's your higher low and the breakout getting out of this. So I'm anticipating that we should push up and get into this area of 165 and maybe potentially 166 to 170. So I like that. It's not large percentages, but it's, to me, it's a pretty solid trade that I like. So now I'm just going to jump into a couple other things that I've been trading, and natural gas. So that's my other one. I'm not using as much money on it because it's very volatile. Um, for an example, yesterday it had a huge move up, and today it opened back down like about 7% lower. But you have to accept that with this crazy chart of natural gas. Right now, I'm looking at the daily time frame. This is what happened yesterday, I believe. Yes. So here's where we got $6.85. I'll go into the bigger picture on this and show you what it looks like on the bigger time frame. But I really like what happened here. So just on the hourly time frame, you see you pop up, trade sideways, you gap up, and every time you kind of fill the gaps. You fill the gaps. So you break up here. The next day, like I said, that's why it's very volatile. It drops several percent, multiple percents in 1 day. So I use smaller amounts of money so that I can trade it and not get too um, emotional about it because there's a saying I learned from somebody: emotion is the killer of all money. So if you're using an amount of money that you're not comfortable with, then you're going to react not as a trader, you're going to react with your emotions. So the gaps get filled every time it opens the next day. People buy it. Gaps down the next day. People buy it. Finishes here, gaps up. And then this was kind of the final climax recently on the hourly chart. Got up to 80 on the hourly. So there was the reversal candle, and then that was how it closed yesterday. So then today it started here, pulled back, but notice what it did. It filled up this gap right here. So I kind of like this spot right here. If I were to trade it and I didn't have any position, I would just use the low of today, which was approximately $6, right on the nose. $6. Psychological numbers, they come into play a lot. But anyway, so here's the EMA. So kind of similar to that Bitcoin chart where you go down below the 12 and the 26, but then you pull yourself right back up over it. So I'm looking at this natural gas as doing that now. It's really trying to get out and then it gets sucked back in, but then people come back in and buy it. So on the daily chart, this is how it looks on the daily chart to try to make things a little more clear. So there's that big jump yesterday right on that candle. So it's now in a daily uptrend. There's where it bottomed out. Now the trend changed to a higher high, higher low, kind of sideways right here. And then you popped up here. See, this is the gaps that drop down on this candle. See, the very next day, those were those hourly time frames I was showing you, where it gapped down, filled up the space between that day and that day, finished strong above that day. And then the very next day, gaps down near the bottom of this candle. By the time the day finishes, push the price up. Then we gapped up. And now today we gap back down to fill this space. Now it's possible we might pull back. We might end up having to come down here first and touch that 12 period EMA because we're pretty far above it. But I don't think it will. I think it's possible. I mean, anything's possible. I'm not going to say it's not possible, but I think it's more likely that maybe it'll pull back another day and get down into this area of this candle, maybe the first third, the top third of that candle. But the more important thing that I like is the daily EMA has crossed over. When is the last time that has happened? So that's on the daily time frame. But anyway, I'm going to hold on to this. Again, I'm using a smaller amount of money than I do on other particular trades because this is a really volatile one. So here's the weekly chart. So you had this final last, and I think that is the rock bottom of natural gas, maybe forever. So that was the bear flag weekly time frame. So now the top of this candle, notice how it's touching that area where you last broke down. So we are retesting, forming the U shape. So maybe, I'm just kind of thinking far ahead, maybe several weeks from now, this will form a nice kind of U and then maybe a bull flag on the weekly chart, maybe extending another 2, 3, 4, 5 weeks, trading sideways in this range, and then maybe bursting further higher. So that's my other trade that I really like. Next one I'm going to go into is this is a little bit of Johnson and Johnson. So here's Johnson and Johnson on the hourly time frame. Looks like a bull flag to me. The hourly time frame has cooled off. It's in the 50s, 59 or so. Notice the EMA lines I use, the 12 period and the 26 period, dipping down. All of these kind of have similar characteristics, but just on different time frames. So here's the hourly dipping down below, but people buy it, dips down below, people buy it, push it higher. And now kind of trading sideways, I just noticed right here. You see this is kind of like a little triangle right here. So on the bigger time frame, on the daily time frame, this is how Johnson & Johnson looks. Right there, definitely in the daily uptrend now. So there's the bottom, and now you finally change the trend. Higher high, higher low, higher high, higher low, sideways, and a higher high, and potentially a bull flag. Also, like I said, I like using the 200 period moving average. So on this particular time frame, the daily, this is the 200 day time frame, and notice on these days right here, which is basically a week in the making, that is holding and staying above the 200-day moving average. And there is the resistance area right now that it's trying to get over. So that area is 165 and change. And on the day that just finished, or the day before, we got up to 163. So we are at a 70 on the daily time frame, but in the much bigger time frame, this is why I bought Johnson & Johnson, because it was oversold on the weekly chart. And, this is not a rinky-dink company. There is the weekly RSI on that final candle there, getting it down to 32.43 on the weekly chart. And then just like Bitcoin on that weekly chart that I showed you, but in a totally different position on the upside, here is the triangle basically of Johnson & Johnson, where it battled back and forth here and then finally pushed out. And on the weekly chart, notice there's your low, there's your high, and there's your higher low, and now your higher high. And on the weekly chart, so remember the daily is just hanging around that 200-day moving average. On the weekly, we are now, for the first time in a long time, we are just coming up and touching it. So if the daily continues further in the next several days, the weekly EMA lines will cross over. And but anyway, I want to hold a position in Johnson & Johnson for quite a while, because I'm going to expect that on the daily being oversold, getting down to 32, that at some point in time on the weekly chart, then it'll reach up into the 60s and maybe getting close to 70. Because if you look at this whole picture of Johnson & Johnson, that is how it looks. So that was the COVID time, comes back and touches the 200-week moving average, gets too far above. There you get the oversold right there, but you still pushed higher eventually, and you're up in the 60s here. So this period was back and forth, back and forth, back and forth from here to here. Notice the bottom there, and then you break the bottom, and then you try to get back up there again, and then you give it all back, and you make a new weekly low relative to that one. But then you get down to the 32 RSI. And notice that anytime the weekly chart has gotten down near 30, this was 29, you had a substantial bounce that led to a big percentage gains. So I like Johnson & Johnson for the big picture. Let's go into Tesla. I know a lot of people like Tesla. What I have here is a 2-week time frame. Let me just make sure of that. 2-week time frame on Tesla. What I do is I play around with different time frames so I can see something more clear. So I play around. I see, do I see a cup and handle? Do I see a head and shoulders? Do I see a reverse head and shoulders? Do I see gap fill areas that are coming into play? So potentially on Tesla, which has been weaker than the technology market overall, this could be an inverse head and shoulders. So going back way over here at the level of, let's just say 200, you have this, and then you have this bottoming out. And notice on the RSI level, 32. same RSI, except of Johnson & Johnson that was on the weekly chart. This is the 2-week chart where that was the low, 101.81 on Tesla. So I believe that is the low. And notice the 200-week moving average. Although Tesla hasn't been, I don't think it's been around enough. Maybe it has been to have 202-week candles. But anyway, it doesn't matter. What matters is it came down and it just about touched it on the 2-week time frame. So then you had this play out like that, and then you topped out from 101. You topped out at 300, so you had basically a 200% gain back in July of this year. Wow, that was this year. I'm sorry, last year, July of 2023. So you had a big run up, right? You got to take those profits, 200% gain. So now the 2-week goes to a downtrend. So you go low, lower high, and a lower low. But I'm anticipating that this potentially right here could be the higher low of 194, right? So Tesla's all-time high, I believe, goes over here to $414. So I'm looking at this as a pretty good value play in this area here, between 193 and presently where it's at. So potentially that 193 could be the higher low on the 2-week time frame. It could also be an inverse head and shoulders on the 2-week time frame. And as long as we don't pull back too much more, I'm going to say if we get down to about anywhere above 200 is going to be okay. We don't really want to get here, but I'm going to say let's say we get down into the low 200s, maybe 210, 208, somewhere around there. So this candle, after this week finishes, will be completed because this candle started January 2nd. And also, that EMA line is being tested, right? Because if it were to pull back significantly more, that EMA line would start to cross underneath the 26 period. So that's what I'm seeing there in Tesla. I don't own any at the moment, but I will probably start buying some, scale in some positions here if it gets down under 230. So in the 220s, and if it then goes under 220, then I'll add some more. And then I would use this as my stop right around 191, 192. All right, so we covered Tesla, we covered Walmart, we covered natural gas, covered Bitcoin, and now I'm going to go into utilities sector. Now, again, this is not going to be a big percentage move, but I like it. I just like the charts, right? If I like the charts, I'll just use more money if it just doesn't have as big of a percentage move. But if I see it clear and I have a strong conviction, then I'll just use a larger position because it's not as volatile. But I'll take a 5% move any day as long as it doesn't take a year to play out. Just kidding. I'm hoping that would play out within a few weeks. So looking at the utilities sector got crushed back in October of last year. And let me see, is this the 2-week chart? Oh, no, that's the daily chart. Sorry. So let's go to the weekly. Again, oversold. So perfectly on the weekly chart, that week right there, that was actually October. I'm sorry. So that was October of 23. Notice the weekly RSI got down to 30 exactly. So it's an ugly chart, I know, but I like it. I like it now because that was extreme. you went from this period of time from $78 to 54. So that's a big move in utilities. So I'm looking at this as change of weekly trend, change of the daily trend, and similar to what I was saying with I think Johnson and Johnson, all of those ones that on the big time frames were oversold on the big time frames. I'm anticipating that they're going to then get up into the 70 range on the weekly chart. So right now on the weekly chart, we're just at 53. And notice the 200 week moving average is right there. That would bring it up to about 65. And after this candle here on the weekly chart, which is 65, 61, then actually, I forgot about this period here. We actually did go above that. So now I'm going to show you back on the daily chart. Stick to the daily chart. So here we finally got up to the 70s, right? So it happens first on the weekly chart where you go from oversold 30. This got extreme back in October on the daily chart, got down to 17. So I'm anticipating that at some point this will probably get up to 80 on the daily time frame on the RSI, and then that will coincide with the weekly getting stronger and stronger and building up to getting up to near 70. So we reached 73, 72 right here on this candle, poking above the 200-day moving average. And then we settled down right here. To me, that's the daily high or low at 61.97. And now we're just trading in a range between the high here, which was very recent, and then we pulled back. And notice the EMA lines are holding right here. You pulled back really hard, but then you recovered very quickly. And now this, to me, looks like a daily daily bull flag. And the daily time frame and the RSI on the daily has cooled off. It's in the 50s. It's really similar to Bitcoin. It's in the 50s, and so I like that. And it's also right. Remember Johnson and Johnson on the daily time frame. We are now trying to get above this 200-day moving average. So Johnson and Johnson. I mean, XLU utilities. That's that one. And what else should we go into? Let me go into steel dynamics. Just trying to be a little diversified here with various things. Right? The things that got beat up last year, these are the ones that I like. Right? So this is a weekly chart, I believe. I'm going to confirm it. And this will be my last one. Okay. So steel dynamics, I mean, I'd have to go way back and show how it played out. But anyway, basically all-time highs back here in February of last year. So basically a year ago on the weekly chart, 69 right there. And on the previous time, you're getting over 70, 72. So you pull back, and now these are reversal candles on the weekly chart. So to me, that's your new higher low. And this would probably look very nice on the monthly chart. So I'm going to draw a line here. I'm going to draw a line here and show you what it'll look like on the monthly chart, because that will probably show you the new monthly high or low. All right, the bottom line. So we'll just remember that. But anyway, let me just go into this weekly a little bit. So you have what these call tweezers. It's a tweezer bottom here. You have a week, and you have the same price level basically, where the low came down to 91.94, and then the next week it came down to 90.55, and then it finished with a positive candle, basically erasing this one. So now the trend changes back to going positive. So the weekly low, high, higher low, back and forth here, a higher low, not a higher high really yet. And now this week you break out and you then change the exponential lines, they cross over, and then you make a higher high, and then you pull back right here, touch the exponential line perfectly, and then you made a higher high. So now we have 4 straight weeks down, and we're looking for a higher low. So what I'm going to estimate, remember where I said you kind of sometimes touch that 26 or you dip below it. So here's this week's candle. So we're on Wednesday. So I'm anticipating that this was kind of like the weekly bull flag right here. So the low of that weekly bull flag was 107. All right. So we're at 112.84. So basically $5 lower, about 5.5% lower from here. But the reward is if that makes a new weekly higher low, and you're risking at this point approximately $5 to the downside. And if that's correct, and we hold that area approximately, scale in. I've scaled in a position here in the 113s. So if it comes down psychologically below 110, I'm going to buy a little bit more right there. And it'll just depend on how the weekly candle looks, if I'll get aggressive or not. Maybe I'll see those daily candles flattening out and getting to oversold or getting close to oversold. But I don't think it's oversold, but it might get down into the 40s. That's exactly where we are right now. We're at 39.93. So yeah, so if we drop pretty hard for the next couple of days, then we will get down into the lower 30s. And that would be down in this area right here. So remember I was talking about that monthly chart? So this is how it looks on the monthly chart. So this is Steel Dynamics, STLD. All right, so here's the monthly chart, right? So it's a clear monthly uptrend, higher low, higher high, higher low, and then here you're trading back and forth, another higher low, double top, monthly bull flag, higher high, higher low. So right here at $90 on that weekly chart, right, that was the higher weekly low, and this is the higher low on the monthly chart. You haven't made a higher high, but I'm not even thinking of a higher high. I'm just thinking on the monthly chart, right? Maybe if we can make that weekly bull flag play out, then we hold it somewhere right around here. Like I said, around 110, 107, but use a stop at that area. Otherwise, then you would use this 95.53 as the monthly higher low. If you're going to use a stop that much farther, then I would not even attempt to buy right here. I would say, okay, we're not going to make a weekly bull flag and we go lower. So that potentially could happen. So if you use the weekly one that I'm talking about, then you just set your stop roughly around 107, 105, and get out of it if it doesn't play out that way. But if you want to use the monthly chart and be more patient, potentially, then I wouldn't enter at this point. So that's my market in review. So those are the things that I'm trading or considering trading. Like I said, I don't have anything in Tesla, but I would be interested in Tesla if it gets down to say 220-ish, low 220s and the low 210s. Then I would like that as a play. All right. So if you like my video and you're not a subscriber, go ahead and subscribe, and I would appreciate it. And if you are subscribed, hey, send me some comments. We'll talk to you soon.